You're getting ready for your 2026 self-assessment, and you're thinking about using one of those new AI tax tools. I mean, it promises to be fast, cheap, and easy, right? But what if that quick click could actually land you in some serious hot water with HMRC?
Well, we're going to break it all down for you. This analysis comes to you from the seasoned tax experts at My Tax Accountant, and they're going to uncover the hidden risks of relying completely on an algorithm for your UK tax return.
Okay, let's set the scene. You've found a great-looking AI tool. You're ready to upload your documents, click a few buttons, and be done with it. But are you accidentally trading a little bit of convenience for a very costly, very stressful investigation from the tax man? Let's find out. Look, the promise of AI is incredibly tempting, isn't it? File your entire self-assessment in minutes, maybe for less than the cost of a takeaway. But when you step into the maze of the UK tax system, well, the reality is a whole lot more complicated.
So here's the roadmap for our discussion. We're going to start with the surprisingly shaky digital foundations these AI tools are built on. Then we'll get into the constantly changing tax rules and explore why AI just can't replace human judgment. After that, we'll look at what happens when HMRC comes knocking, and finally, don't worry, we'll talk about the real solution.
All right, let's get right into it with our first major risk. And this one's a bit of a hidden danger because it's not about the AI software itself, but about the government systems it has to connect to. What happens when the official digital infrastructure is, well, unfinished?
And this quote from the watchdog group TaxWatch UK really says it all. Many of the digital gateways into HMRC's system, the very things your AI needs to use, are still in beta. Now, what that means is they're still being tested, and that testing might just be happening with your very real, very sensitive financial data. It raises some huge questions about accuracy and privacy.
And get this, HMRC has even admitted that less than 20% of their key digital interfaces are what they call stateful. Now, in plain English, that means a massive chunk of their system can't properly track changes or be tested reliably. Any AI tool trying to build on that is standing on seriously shaky ground.
And if you need proof of just how chaotic this can be, just look at this real-world timeline. It's the story of one developer's 18-month nightmare trying to get their software approved by HMRC. We're talking endless delays, confusing emails, and at one point discovering the official test environment was just plain broken. This is the system your shiny new AI tool is trying to navigate.
Okay, but let's imagine the technology was perfect. Even then, AI faces another huge hurdle, the constantly shifting sands of UK tax law. You see, an algorithm is only as smart as the rules it was programmed with yesterday.
Just take a look at this whirlwind of changes for the 2025-26 tax year. There are new reporting rules for the self-employed, a different way for directors to report dividends, changes to capital gains tax reliefs, and the entire tax regime for furnished holiday lettings, gone. And that's not even mentioning the massive reforms for non-DOMs. Now, honestly, can an AI coded last year possibly keep up with all of this? That's not all. Here's where most people go wrong.
You know, we don't even have to guess what happens when software can't keep up. A very recent, very real example shows how even HMRC's own systems fail to handle a change in the law.
So back in the 2024-25 tax year, the government changed the capital gains tax rates on residential property, but they did it right in the middle of the year. You can see here, on October 30th, the higher rate suddenly jumped from 20 to 24%. This created a massive headache for anyone who sold property that year.
And here's the crucial part. As this tax expert pointed out, HMRC's own online filing software wasn't updated in time. It just kept applying the old, lower rates to all gains, no matter when the sale happened. So if you just trusted the system, your tax return was guaranteed to be wrong.
And here's a pro tip that just proves the point. The only way to get it right was to go to a separate online calculator, work out the tax yourself, and then manually override the software by putting the correction in box 51. It's a perfect example of where you need human knowledge to spot and fix a machine's mistake.
This brings us to our third, and maybe the most important risk of all. Tax isn't just about plugging in numbers. It's about the messy, complicated, unique reality of your life. And that is something an algorithm just doesn't get. Stay with me. This next point might surprise you.
To make this really clear, let's meet Anya. She's a freelance marketing consultant based in London. On the surface, her finances might look straightforward, but her real life is full of nuances that an AI would completely miss.
Okay, let's start with a really fundamental concept in UK tax, the wholly and exclusively rule. Sounds a bit formal, but all it means is that for an expense to be fully tax deductible, its one and only purpose has to be for your business. If there's any personal use mixed in, you have to split the cost. And that split, that takes human judgment.
For example, Anya pays £500 a year for a software subscription she uses for her client work. But she also uses it now and then for personal projects. An AI tool might just ask a simple yes-no question. Is this a business expense? But Anya, being honest, knows she needs to apportion it. She estimates her business use is about 83%. Only a human can make that kind of judgment call to correctly claim £415. Now for a really complex area, IR35, sometimes called disguised employment. These are tricky rules designed to stop contractors from essentially acting like employees just to pay less tax. Deciding if a contract is inside or outside IR35 isn't a simple calculation. It's about interpreting the entire working relationship.
Now let's look at Anya's real-life situation. Her main client is a UK company, but she does most of her work from her home in Spain and just flies to London for important meetings. So, is she a UK taxpayer? Is her contract subject to IR35? Where is her income technically earned? An AI cannot answer these questions. It takes a deep understanding of tax residency, international tax treaties, and the nuances of employment status.
So what happens when all these little errors and misinterpretations add up and trigger the worst-case scenario? Let's talk about our final risk, an official HMRC investigation. Because when that brown envelope drops through your letterbox, I can promise you, your AI software will not be there to help you.
And make no mistake, the chances of an investigation are going up. HMRC is using its own powerful AI to scan millions of returns, looking for anything that seems out of place. It's basically a battle of the bots, and if your AI makes a mistake, you're the one who pays the price.
Now, if you do get hit with a penalty, your main legal defense is to claim you had a reasonable excuse. But this isn't just saying, oops, sorry. The legal bar is incredibly high. It has to be a genuine, unforeseeable event that stopped you from meeting your obligations, judged by what any prudent person would have done in your situation.
And here's the absolute killer. The law specifically says what is not a reasonable excuse. And right there on the list, relying on another person or a piece of software to do it for you. You simply cannot blame the algorithm. The legal responsibility is always 100% yours.
And if you decide to fight a penalty, just look at the process. It is entirely human. You have to write a formal legal appeal, request an internal review, and you might even have to argue your case in front of a judge at a tax tribunal. An AI can't draft a legal argument, it can't present evidence, and it definitely can't represent you in court.
Okay, so after hearing all these risks, you might be thinking technology is the enemy here. But it's not quite that simple. The real solution isn't to go back to paper and pen, but to pair smart technology with that irreplaceable layer of human expertise.
So let's just quickly recap those 4 huge gaps that a purely AI approach leaves you exposed to. It relies on flawed government systems, it can't keep up with ever-changing tax laws, it lacks the human judgment for your unique life, and it offers you zero defense when things go wrong.
The smart answer, then, is to get the best of both worlds. Use technology for what it's good at, gathering data, doing quick calculations, but then you pair it with the strategic thinking, the nuanced understanding, and the professional accountability of a human expert.
And this is exactly where my tax accountant comes in. They provide that essential human oversight. They make sure your tax return isn't just filed, but that it's filed correctly, compliantly, and in a way that truly has your best interests at heart.
So really, it all boils down to this one simple question. Is saving a little bit of time and money right now worth the massive risk of penalties, stressful investigations, and sleepless nights down the road?
Don't leave your finances to chance. For real peace of mind knowing your self-assessment has been handled correctly by a professional, get in touch with the team at My Tax Accountant. You can call them on 028-570-8531 or drop them an email at info@mytaxaccountant.co.uk. And for more great insights like this, make sure you subscribe to their YouTube channel.
And finally, just a quick but important note. The information we've discussed here is for general purposes only. Your tax situation is unique to you. So before making any financial decisions, it's absolutely essential that you consult with a qualified professional like the experts at My Tax Accountant.